You were not meant to be a slave to the grind. You were not meant to trade your life force for money. You can escape gravity. You can unlock your life. You got this. Let's go.
Hello and welcome to Unlock Your Life. This is your host, Jennings. Guys, we just came off of our conference last weekend. It was Thursday night, Friday, Saturday. It was an amazing time. We had about 164 people come in to our annual Deal Room Conference, My First Million in Multifamily Conference. We had speakers coming in talking about overlaying Section 8 vouchers on LIHTC. So interesting. I'm going to have him on the podcast for another episode to dig deeper into that. Because here was the crazy thing. He said 80% of the deals that were coming across his desk were penciling. They were actually good deals. When you think about how many deals I've underwritten to find a good deal, that alone caught my attention. We had a guy talking about flipping land, making offers at 40, 50 cents on the dollar, putting things under contract, and then flipping them to another buyer or selling them owner finance. I know owner financing is a crazy arbitrage. It's a totally different market. Making passive cash flow with land flipping and also making chunks of cash up front. We had Ralph Reard come in, talk about raising capitals, raise over $10 million in equity checks to buy a $80, $90 million portfolio. We had Tim Vitale talk about underwriting. We had him talking about LIHTC. We had Tim Vest there, Tim Vitale's partner. We also had Carlos Gutierrez and Nate Watkins come in and talk about flipping apartment complexes. So I've partnered with them on some deals. So there was 160 something people there. Some of them were in the deal room, some of them were not. But one of the most exciting things that happened was the awards banquet. So at the awards banquet, we said, if you're in the deal room, stand up. If you closed a deal in the deal room this year, I want you to come to the front. And guys, 69 people that were at the conference came up that had closed the deal with the deal room, walked across the stage. We counted up the units, 4,030 units closed out of the deal room by 69 deal room members. Guys, there's only like 240 members in the deal room, and obviously not everybody could make it to the conference. So I was extremely proud of that, just to see, okay, this program is working. I'm attracting the tribe that is going to put in the work, be persistent, and truly unlock their life and change their life. So if you've been listening to the podcast for a while, you're interested in digging into further what we're doing, go to mfmim.com. That stands for My First Million in Multifamily, but mfmim.com. There's an intake form there. You can book a call with me or Yaden. We personally take all the calls. We want to talk to you. We want to hear your story and see, are you serious about multifamily? Are you serious about doing this? What it takes? And kind of a no BS approach to getting into this field, doing big deals and changing your life. But today I want to talk about deals. There are no deals out there, we hear. Deals are so hard to come by. How can I find a deal? Well, I want to talk about a deal that came across my plate maybe a month and a half ago. I haven't really talked about it much yet because I wanted to get it under contract. I wanted to go through the due diligence. I wanted to walk the property myself, make sure this thing had legs. And, we're not closed yet, but we're through the due diligence. Our earnest money is now hard, non-refundable. And it looks like we are going to close this deal. And this deal came from good old-fashioned elbow grease and networking. The guy was in the deal room that found the deal. He found this in his hometown. He's from the New Orleans area of Louisiana. And making connections down there with bankers, property managers, he came across a property through a broker. And this broker really had, I believe, mispriced the thing. And they said, well, what's it going to take to close it? They got beat out on an all-cash offer, but that person did not perform. For whatever reason, I don't know if their due diligence didn't go well or they didn't actually have the cash, but it fell apart. And this deal room member brought it to the deal room, talked about it, and was able to gain the confidence of, okay, if I put this thing under contract, we are going to be able to perform. We're going to be able to close this deal. So he brought it to our underwriting call. Every Tuesday, we kind of tear deals apart and go through them with our students. And the deal looked great. And that deal was presented to the entire deal room, but really there was only, 25, 30 people on the call. Also, people that were in his sprint team got a kind of a first glance look at the deal. And he needed help, right? But before I get into needing help and how they participated, let me tell you a little bit about this deal. So, like I said, it's about, 30, 40 minutes away from New Orleans. It's on the bayou, very close to the water. So you've got hurricane risk. It's not really in a flood zone, but it does have hurricane risk. And a hurricane kind of went through that area a couple of years back. So it's over 100 units. And the price tag that we put it under contract was $3.75 million for 100 plus units. And you may think, wow, that's amazing. $35,000 a unit. That's pretty solid. What's wrong with it? That's what I thought. Is it in a war zone? Are the rents $500? Does it have massive delinquency? Does it have a huge CapEx budget that needs to be overcome? So here's the numbers. 95% occupancy. Last month, out of a $78,000 rent roll, the delinquency was like $2,000 to $3,000. So that's very, very good in multifamily. You're going to 3-4% delinquency. The existing in-place rents were $816. So really not very low rents. And if you're thinking $35,000 a unit, $800 plus per month in rent, if you're an investor like me, I know you're immediately thinking about the 1% rule. Well, this thing is like, 2% rule, 2+% rule. So that's super attractive. New roofs. Roofs got replaced after the last hurricane came through. New windows, all new windows. Well, maybe the tenant base is rough. Not the case. Maybe the unit interiors are ripped up and torn apart. Not the case. I walked the units. They're nice. So what is the problem here? Why is this thing trading at the price it's trading at? And in digging into the deal further, there was basically one huge glaring issue. Guys, this was the number one issue. Before I tell you about that, let me tell you about the minor issues. Minor issue is it's in a stable town. There's about 30, 40,000 people there, but it's not growing. It's not dying. So not an exploding market. It also had electrical issues. Okay, so it had stab lock breakers. It had Federal Pacific panels. Those are all a fire risk, and they have to be replaced. Insurance goes through the roof when you have these kind of panels. A lot of insurance companies won't even insure them. So there's another strike against them for the pricing. And third, most importantly, was they had non-recourse agency debt. So agency debt is debt that you can take on. It's backed by the federal government. And you can get great rates. You can get lower interest rates. You can get longer amortization. You're not personally liable for the loan. The asset is backing the loan. So if you default, they take the asset, but they don't take your house. They don't come and sue you personally. But a lot of times with these agency loans, there's a lot of insurance requirements. So when you factor that in, along with not really having upgraded electrical and maybe even a fire hazard for the electrical, their insurance premiums were $388,000 a year, right? You're talking $3,500 plus per unit per year to insure these apartments. And so, even if you're collecting $800 a month, if you have a $400K insurance bill, that's going to decimate your net operating income, the profitability. And in fact, the profitability on this building was only about $90,000 a year, even though they're collecting $80,000 a month. At the end of the day, by the time they paid their taxes, insurance, their property managers, repairs and maintenance, etc., they were only netting $90,000, right? So now they're really not even breaking even. They're not covering their mortgage, and this has become a problem. The father bought this. He bought a couple other properties in the town, and he's passed away now. His children live out of state. They're not really interested in operating these properties, dumping in the capital expenditure needed to replace and upgrade all these panels, getting rid of the debt that they have now to refinance with new debt so they could lower their, they don't want to mess with that, right? They have their lives. They're successful in other things. They just want this loan off their plate, and they want to maybe put a couple $100K in their pocket and move on. So this all kind of fit into a really, really maybe good deal. So putting it under contract, we uncovered that if we got with a regional bank, like a local bank, we would be able to do a different insurance policy, one that was not as restrictive and one that wouldn't be as expensive. We also found that if we replaced all these electrical panels and breakers, et cetera, that was going to lower the premium. And so we hammered it down to get our quotes, and we now have hard quotes in hand for the insurance, and it's $140,000 a year. So 388,000 down to 140,000. That's $248,000 in difference just by switching insurance companies right off the rip. Okay, so this is an extremely huge value add. Usually you have to work way, way harder to add 250 grand to your NOI, but that was one value play. The other one was 816 for the rents on average is low. It's about $75 to $85 low based on the comps. And one of the partners in the deal, he has 100 units in the town and the surrounding towns. He knows the rental comps. We talked to a few other managers and realized that we can get this average to close to $900. And so just by doing those two things, we are going to dramatically change the NOI. I mean, let's just, for easy math, let's say 100 units times $75. That's an extra $7,500 a month. Times 12 is $90,000. And not all that's going to go to NOI because there'll be some management fees associated with that and et cetera. But still, if you add, let's just say $50,000 in NOI at a 10 cap, I mean, that's $500,000. If it's an 8 cap, that's $700,000 or more. I'm not doing the math, but bear with me on my guesswork. But it really can add up, and adding $250,000 in NOI is huge. So we put it under contract. We walked the units, and the tenant base is nice. The tenant base is good. They're collecting the rents. The condition of the property is very, very good. I would say this is easily a C+ to B- asset, and I've owned a lot of them. And so we did go under contract. The electrical panels were not disclosed to us in the beginning. So we had to just uncover that, right? And this is why I say buyer beware. This is why we have due diligence checklists, or we're lining out, man, what is the deal? We scoped the sewer lines. We found there was a cracked pipe under a parking lot somewhere that we're going to have to replace. It's not going to be a whole lot, but it's got to happen. We found that some of the walkways were cracked up. We found that there was some leaking on the bricks and there was a little bit of water infiltration in a few units. We got to address that. But we didn't find anything major, but we did build a very, very good CapEx budget, which is probably going to run us around $500,000 to $600,000 to do what we need to do. So we got to replace all these panels. This is a big expense. We got to fix some of this other stuff. And so we went back to the seller, said, hey, look, you didn't disclose this electrical. It wasn't in our underwriting. And he ended up giving us a $200,000 concession. So now we're under contract at $3.55 million. Okay, so now we're at $32,870 a door, which is solid. But we do have to spend the money to fix up the panels. So that's a piece of the pie. So finding this arbitrage of where other people don't, right? Seeing opportunity in a problem that you know how to solve where other people don't. Because I promise many, many people looked at this deal and they said, oh, it's very close to the coast. It's got hurricane risk, and look at the insurance. Insurance is $400,000 almost a year. There's no way I can make this deal happen. No matter, even if I got $1,600 a month, this thing would just barely be worth it. So I'm going to pass. They didn't think creatively like, well, wait a minute. Who's driving those insurance costs? Is it the electrical panels? Is it the bank? Can we switch banks? And with agency debt, there's usually pretty stiff prepayment penalties. So they're usually like a 10-year term. And if you're going to refinance or sell within 2 or 3 years, like you're going to get whacked with a massive penalty. I'm talking like $500,000, even more sometimes. But towards the end, most of that's burned off because you've paid a whole lot of the interest. And a lot of times in the twilight years, there is no prepayment penalty. So there's only 2 years left on this loan and there was no prepayment penalty. So the seller doesn't have to deal with that. And so looking at that and saying, okay, if we upgrade this electrical, we switch banks and we switch insurance companies, this all of a sudden becomes a great deal that a lot of people looked at, that a lot of people passed over. And so what we think is, if we can do what we want to do with the NOI, $75 rent bumps, get the insurance costs down, we believe that this property will be worth about $7 million at an 8 cap. Okay, 8 cap, pretty conservative, maybe is a little too high, but it is a coastal region of Louisiana. There is hurricane risk. And so, Louisiana is not a super, super hot market. This is definitely a secondary or tertiary market. And so we want to be conservative and on our exit. But end of the day, apartment complex is just a business. When you go to sell a business, your buyer is looking at what's the bottom line. What does this business make? What is the EBITDA? Or in apartments, what is the net operating income, which is the income it makes before you pay your mortgage, right? So after you take out all your expenses, whatever's left over, that's your NOI. That's what that property makes. And so if you increase that number, all of a sudden somebody's willing to pay more for it because they're looking at like, I need to get a 6% return on my money. I need to buy at least a 6 cap. I want to get an 8% return on my money. I'm going to buy it an 8 cap. And of course, they're going to get better returns than that because they can leverage debt, to use that, and they can ride the appreciation. And that's why a lot of these deals do make sense. And so our goal is to take a business that has a major cash bleed, fix that problem, and then 12 months later, 18 months later, 24 months later, we're going to take this back to the bank or take it to another bank, maybe refinance the loan and refinance it with the same bank, not agency, but refinance it, take our investors' money back out, and then move forward with the deal and operate it and cash flow it. Or we could sell it, right? I think after the CapEx, closing costs, all that stuff, we're going to be all into this deal for, 4.2 to 4.5 million. If we can sell it for 7, that's a $2.5 to $3 million delta there where we can make a whack of money. And the cash needed to close this deal is about $1.2 million, $1.1 million to $1.2 million. So if you can take $1.2 million and turn it into, 2.5 plus get your $1.2 million back, well, that's a pretty solid deal, especially if you can do that in a short period of time, like 2 to 3 years. So very, very, very attractive deal. You say, well, Jennings, that's great, but I'm not you. I don't have access to these kind of deals. I don't have access to off-market stuff or even on-market stuff. The thing is these guys needed help, right? When they brought this deal to the deal room, they needed help with a loan. And one of the key members, founding members of the deal room, not me, stepped up and said, I'll sign the loan. I'll sign the loan with you guys. They needed experience, right? Well, there was a deal room member there that had 100 units, had local relationships with the banks. He stepped up. He said, I'll help you out. I'll sign on the loan. I'll be a part of the deal. They also needed $1.2 million in cash, real money. They got to have that down payment. And so 3 deal room members stepped up and said, we'll raise $300K each. And the guy who found the deal is also putting in $300,000. So there you go. That's how it came. And if he didn't have the $300,000, he could have found a 4th guy, given up a little bit of equity for the 4th guy to put in $300,000. And so anybody in the deal room, and multiple people in the deal room did take him up on that, said, hey, I'm ready. I've been working this. I've been understanding this. I see what you have. I see you have a diamond in the rough. I see you have something with potential. I see you have something that my investors might like. Let me help you. Let me give you money. Let me give you cash. Who doesn't want that? And so the people that were prepared, the people that were ready, that were digging their well, all of a sudden, here's somebody that's thirsty. You got the water. You got the $300K, the $600K, the $1.2 million, whatever it is, to get into this deal. And so Yaden and I, we partnered with them on this one. We said, hey, we'll bring $300,000 each. So Yaden and I are throwing in $300,000 from our investor base. And one of the deal room members throwing in $300,000. The other deal room member, he may raise it. He may put it in his own. We'll see how it shakes out. But this is how it works. Being in the room, having the relationships, being ready for when opportunity strikes. So my thought to you, my challenge to you is, if you want to get going, how are you going to get there? How are you going to make the first couple steps? How are you going to get from A to B to C to D? Who are the people you're going to need to make connections with? Who's the person that you need to become? What are the real skills that you need to invest in yourself to become who you need to be, where you are proficient and you are competent and you can raise capital and know this capital is going to be well spent. It's going to be well invested. It's going to come back to the investor. It's going to come back to me, and we're going to make a profit on this deal. So if you're sitting there listening and you're like, man, I want to do this. I want to do this for myself. Hit me up. You can message me on Facebook, Instagram, whatever. You can go to mfmim.com and go through the portal there to book a call with us and talk about this stuff. Or if you're like, hey, I got some money that I'd like to put into a deal, hit me up there. I mean, this one is probably full, but we have more, right? Stuff is always coming down the line. So if you want to connect with me as an investor, shoot me a DM. We'll have a call. I'll put you on my list and I'll see that you get other opportunities put in front of you. All right, guys. Well, this one's short and sweet, but I appreciate you. And if you're listening and you were at the conference, I really appreciate you coming. A lot of people came up to me and said, hey, I've been listening to your show, because sometimes recording these things, it feels like a vacuum. Is anybody out there listening? Is this doing any good? Does this make a difference in the world? But it does. And people are connecting with us. We're connecting with them. They're helping us. We're helping them. And if you want to come to the conference, it's going to be next March 2025. And guys, we went from 120 to 165 this year, or next year, 2025, I'm going to do 250. We're going to get 250 people there, and I need you to help me reach that goal. So if you came to the conference and you enjoyed it, tell your friends, buy your ticket for next year. If you didn't and you missed out and you saw us posting and all the deal room members posting deals that they were closing and the awards banquet, then book your ticket for next year. Just shoot me a message and I'll get you a link to the conference ticket. All right, guys, well, have a great week. I love and appreciate you all. Thank you for being here, and take some time this year, this week, today to unlock your life. Peace.
This is thepodcastfactory.com.